Hello everyone. Today I want to talk about just want to talk about my trades, right? My running trades. I just want to give you an edge, more like my psychological thoughts that enabled me to take this trade. Why did I take these two positions on volatility 75 index and volatility 10 index? So I just want to share my psychological thoughts with you why I took these two positions, right? So, like what I do on this YouTube channel is to try to educate forex trading enthusiasts and potential traders as to how to trade the most profitable way and to how to trade the most risk secured way, right? You want to make money from the market, yes, but you want to do it with calculated risk. Mind you, even calculated risk is a risk, right? So you want to calculate how much you're risking and know that okay, it's safe for you to bear. You want to take bearable trades, you want to take bearable risk at a time accordingly. All right, so today like I said, I want to tell you, I would just want to discuss why I took these positions. Just as usual, as I promise, I'm always going to give you reasons why I take my trades. What did I look at? Why did I make this decision on taking a position on this particular instrument? Why did I make a decision on taking a position on the other instrument? I just want to share my psychological thoughts with you. I want to show you how what I see in the market before I take a position. Now I'm just gonna go to volatility 75. Let's talk about volatility 75 first. All right, volatility 75 index. Wow, okay. So this is volatility 75 index, right? All right. So you could see I took a buy on volatility 75 index of two buys per se, two buys on volatility 75 index on 0.005 each, 0.005 each accordingly. Right, so why did I take this buy? Why did I take this buy? Now, talking about candlesticks that give money, talking about candlesticks that give money, I I was ready to take this buy when I noticed a consolidation on the chart. When I noticed a consolidation on the chart. Right. So the chart on the H1 consolidated around this time period. It consolidated around that time period. So anytime within there, I was expecting a breakout on consolidation. Right, I was expecting a breakout on consolidation, and looking through, I noticed that the market gave several several hammer rejection candlesticks. You can see these hammer candlesticks, each of them represented rejection of the buyers from letting the price falling lower. So each of them represented rejection of the buyers from letting the price fall lower. This is a hammer, this is a hammer, this is a hammer, this is a hammer. So what this means is that the buyers are refusing the price from falling any lower. The buyers are refusing the price from falling any lower. So the market was trying to build a foundation for it to skyrocket. So what I did, I needed a breakout. I was waiting for a breakout. Now, when when the market printed this bearish candle, when the market printed this bearish candle, breaking out from this zone, you can see breaking out from this zone, right? So I wanted to see a confirmation of that break, right? But in the next hour the market printed a bullish candle, right? So this zone is already broken out from, right, before this bullish candle was printed, right? So what I did is, comparing these two candlesticks, I saw a harami pattern. I saw it to be a harami pattern. So in a harami pattern, you also want to wait for a confirmation. You want to wait for a confirmation in a harami pattern. For those of you that have taken my course on candlesticks that give money, of course we know that the the harami pattern, it's one of the patterns that we consider when we are talking about candlesticks that give money, right? But the harami pattern must be considered by waiting for a confirmation candlestick. A candlestick should confirm the harami pattern. This is a harami pattern. This candlestick and this forms this both candle, the bearish candle and the bullish candle put together formed the harami pattern. But the harami pattern is not a confirmation on its own. The harami pattern, it's a signal, right? It's a signal, but it's not a confirmation on its own. So we are going to wait for the next candlestick to confirm the harami pattern as a bullish reversal signal. So looking at this, right, we have to wait for another hour. Now the next hour, at the end of the next hour, this bullish candle printed, at the end of the next hour, right, which has now confirmed, this bullish candle has now confirmed this harami pattern as a bullish reversal signal, right? So now that is why I took these two positions here. You can see the buy. That is why I took this buy. The buys I took here, two positions, right, running, so floating at around 168 USD right now. But this is why I took these both positions, and what I did was to place a stop loss. You can see a stop loss is under. The stop loss is under, right? The stop loss is under the wig of the lowest wig of that harami pattern, right? So you want to place your stop loss following the rule of thumb. You want to place the stop loss at the level where only when the trend has reversed on you or your analysis is wrong, that is when your stop loss will be hit. Right? You don't want to place your stop loss too close. You just want to keep it below the wig of the signal candlestick, below the wig of the signal candlestick. So you can see that is why I placed a stop loss below this wig. Below this wig, I placed my stop loss below that wig. Right? If you look through, you'll see the line of my stop loss there, right? So now once that is done, I already knew, oh, this trend is gonna run for a bit, so my target should be anywhere between 1 is to 2.5 accordingly, and you can see how price ran accordingly. So all I did was just to take the trade and wait, and you can see what has become of the price, right? You can see what has become of the price. So this is candlestick that gives money, the harami candlesticks that give money. Now we just this is a bullish harami. Why? Because it's a bullish reversal pattern, right? So the harami pattern, like I said, it's it, it requires a confirmation candlestick. The harami pattern requires a confirmation candlestick. You should wait for the next candlestick before you can confirm the harami to be a bullish reversal pattern, which is what I did, right? To place um, more conservative, you need to wait for a confirmation candle. You have to wait for a confirmation candle to confirm this harami pattern as a bullish reversal signal, and that is what I did here, and I took my entry accordingly after the formation of this confirmation harami confirmation candlestick. After the confirmation, when this time period closed, that was when I took this buy. I took two buys accordingly, right? Like you can see, and I placed an XL underneath. I left my TP open at this time, but I know that somewhere around this MA 200 should be my target, right? So let's see. I might be hoping it breaks the MA 200, but it will test. I might be hoping it breaks above the MA 200, but I feel it's gonna test. It's gonna retrace a bit before it goes back to break. So what I'm gonna do, following my risk management um, procedure, I'm gonna close one position accordingly. I'm just gonna close one position accordingly and let the other one run. Right. So now what this means is I have at least taken profit. Yeah, I've just closed out a profit, right? And I'm letting the other one run, the other position run. So this means that I'm already booked profit, right? I've already booked profit, right? So even after this retracement and all of it, I might not. Um, when I'm trading this I might choose to move my Excel above though, but I feel I should let it at this point, right? Until price breaks above the the MA 200 until price breaks above the MA 200, because sometimes the volatility 75 is quite funny though. But I think, okay, what I should do is let me move my Excel right now and see what becomes of it. So however, whatever be the case, I've already booked my profit, right? Like you can see. But the most important thing is playing safe, right? Taking calculated risk. That's the most important thing when trading. Playing safe and taking calculated risk. Wow. Okay, so I'm moving my Excel to 67, 67, right? Right. So that is my new Excel. So I believe price would come, would test the MA, the yellow line, right? It would test that level for the yellow line and go back to break the MA 200, and go back to break the MA 200, or at most it's gonna come and test this green line at most. Most it has lots of levels to test, right? So at most might come and wow, the system is really acting up. I'm just going to see how I would go back to that chart, right? System is really acting up. Just look at, all right. Okay, so um that explained, I would just go through to volatility 10 index, because it's like my system is trying to freeze or kind of. I'll just go over to explain about volatility 10 index, why I took that buy, and once I have time, I'll come back to talk about psychological thoughts, just like I was on volatility 75. Right. So my psychological thought on what actually um, defined my entry, what actually defined my entry on volatility 10. I'll quickly talk about that because of time, because I wouldn't want this video to be too long, so it will enable me upload accordingly. So my psychological thought why I took this position, on volatility 10, like you can see, I took this position on volatility 10 because the chart printed a double bottom. The chart printed a double bottom. All right, I'm just gonna show you what I mean by a double bottom. Right, you can see around this level, that is the bottom here, which is the first bottom that is touching this horizontal line I made here. Let me make the horizontal line thicker. All right, you could see, just showed you the first bottom, which is the shaded rectangle, and this is the second bottom that also touched, that horizontal line. So that is a double bottom pattern. So this pattern, when we're talking about price action trading, it's a very profitable pattern. If you could determine this pattern on the chart, the chart, you could tell the direction where price would go. You could have a super guess on the direction where price will go. So whenever we find a double bottom on the chart, likely to buy, the price is likely to buy. At least 92% of the time it will take a buy. Now talking about candlesticks that gives money, right around that bottom, the second, right, um an inverted hammer was printed, like you can see. An inverted hammer was printed. For those of you following my course, you already know what I mean. Oh, for those of you following my course, you already know what I mean. So you can see an inverted hammer. This is an inverted hammer, right? So just like um, I said when talking about candlestick that gives money, an inverted hammer is a candlestick that gives money, but on its own, it is not a confirmation. On its own, the inverted hammer could be a signal, but it requires a confirmation candlestick to confirm if the inverted hammer is valid to be traded or not, right? So the next candle confirms the inverted hammer to be a bullish reversal signal. So you can see the next candlestick that's confirmed the inverted hammer. So at the close of this candlestick, so the candle closed bullish. The inverted hammer being a bullish reversal signal, it requires a bullish candle to be printed after it to determine that it is a bullish reversal pattern. So at the close of this bullish candle, I took this buy. You can see at the close of this bullish candle, I took this buy, and I place an Excel underneath it. You can see my Excel underneath that bottom, right? So following the rule of thumb, you need to place your Excel at a position lower than that bottom. So it shouldn't be too tight. Just place it at the position below that bottom to enable the price to breathe, right? So you're placing it at a direction, at a level where it can only be hit. Your XL, your stop loss will only be hit if your analysis is wrong, right? But in this case, the analysis was right, so you see price went up accordingly, right? So I took two positions of this as usual, but I closed one somewhere around here, right? I closed one right at this point, and what price has been doing since. Price has made two waves. We're around the second wave already. So this is actually how I look at the chart. This is what determines my my trading decision, why I take a trade. This is what I look out for. So I would encourage you to subscribe to my channel, right? You should write on the comment box to let me know if you have anything you would want, anything regards to my chart you would want me to further simplify or explain about, right? And I would also like you, once you watch the video, click on the thumbs up button, right? Just like the page, right? And you could also do well to share my videos on your YouTube, on your Facebook channel, on your Facebook pages, and on your Facebook, so your friends could also get to learn from what I do, right? So the whole point of this is to make sure that everyone that wants to trade forex could have an easy landing. You could know how to trade forex the safest way accordingly. So you could um what as you watch, you subscribe on my page, right? I want us all to subscribe so you will never miss my video, and also share this video with your friends on Facebook, share this video with your friends on Instagram, right? Share it with your friends on WhatsApp, so all so we could all benefit from what I do, right? We could all benefit from this. So you could see what I do, you could see how simple it is. This strategy is simple and everyone can do this. This strategy is simple and everyone can do this. It's just about knowing the patterns of the chart, knowing the candlestick. Candlestick patterns are one of the most reliable patterns when trading forex, right? Because it is not late. The candlestick pattern is not late. It gives you the right information at every point in time, right? So all you need to do is you want to know all of these candlesticks, the ones that give money, and how to treat them. And that is what I'll be taking you through all this period for entirely free. For entirely free. I'm not asking you for anything. I'm not asking you to join my signal group or VIP signal. Just learn how to trade the right way. Learn how to trade the right way, and watch all my videos, and click on the like button, the thumbs up button, to encourage your friends and your well wishers to subscribe to the page too, and let's all grow together accordingly. Thank you.